Hello viewers, welcome to our channel Trade AKR. In this video we will learn about 3 EMA trading strategy. One of the simplest and easiest to use trading strategies is the 3 moving average crossover strategy. With the 3 moving average crossover strategy you can quickly identify a trend and how strong the trend is and find both long and short trades. You can use this strategy in all different market types, and you can also use it on longer and shorter time frames. In this video we go through everything you need to know about the moving average crossover strategy and how you can start using it in your own trading. The reason behind exponential moving average is so popular with many traders is because it focuses more on the recent price than the simple moving average does. Where the SMA is just averaging the price out over a certain period, the EMA adds more weight into the recent price when forming. The 3 moving average crossover strategy is a technical trading technique that uses 3 exponential moving averages of different time lengths to create signals on a chart. The 3 moving averages can be used together as filters for price action, showing the best entries and exits to go with the flow of the current momentum and trend on the chart. 3 moving averages simply show the current direction of momentum on a chart and can be used to create good risk-reward ratios at entry through the use of stop losses, trailing stops, and profit targets. The 3 EMAs can give stronger confirmation than just 2 EMAs crossover. It can also give a better context to the price action in relation to the 3 EMA lines displayed on the chart. 3 EMAs crossing above the price at the same time is a strong bullish signal, while 3 EMA crossing below the price at the same time is a strong bearish signal. These EMAs can also be used to define the best entry and exit levels, since the 3 indicators represent the market trend and price momentum on the chart. A crossover between the short-term EMA and long-term EMA serves as a signal to enter a position. Meanwhile, the medium-term EMA indicates a zone of values for possible mean reversion. This means that when the price strays too far, it will eventually return to the medium-term EMA line. Exponential moving averages help to identify price trends and potential support and resistance levels. Since moving averages can also indicate support and resistance areas, the EMA can serve as a support in an uptrend and as a resistance in a downtrend. This reinforces the strategy of buying when the price is around a rising EMA and selling when the price is around a falling EMA. Now let's see about moving average crossover strategy. But before going forward, be sure to hit like button and subscribe to our channel for more knowledgeable videos like this. A moving average crossover is a technical analysis method that uses 2 or more moving averages of different periods to analyze the trend and momentum of a market. Most times, EMAs of different periods are used for this. The longer period EMAs indicate the trend, while the shorter period EMAs are used to indicate the momentum of the price. While one moving average can smooth out the overall price action and give us a good indication of the overall trend, using multiple moving averages helps to gauge the strength of the trends and also find trading opportunities. The idea behind 3 moving averages of different periods to create a strategy is to get an idea of the different trends in the market, long-term, medium-term, and short-term trends. The shortest period moving average in the system also indicates the price momentum and gives the trade signal when other conditions are right. Now let's gain some knowledge about trade line, uptrend and downtrend. It should be rather simple to determine the trend's direction. The swing high and low structure is the simplest for identifying the trend. A sequence of higher highs followed by a series of higher lows constitutes an uptrend, whereas a sequence of lower lows and lower highs constitute a downtrend. Now let's see some buy and sell examples with the help of 3 EMA, pullback and crossover strategy. First, we will take a look at buy setup. For buy setup, look at this chart. As we can see in this chart, price is in uptrend and trending above 200 EMA, and price started its journey below 20 period EMA, and then 9 and 20 EMA, giving bearish crossover at this point. So we can accept that price entered in pullback situation. So we can accept price to pull back to 200 EMA, and take support. So at this point price touches the 200 EMA, so as you can see here price is in strong pullback zone. And if we connect lower high points and draw a trend line which looks like this, so as you can see at this point the short-term trend line breaks by the price, so this would be our entry candle. So we would take buy trade at a high of this candle, and you can put a stop loss at low of your entry candle or 20 EMA, and profit target would be 2 times of your stop loss, which will end in a profitable trade. And more on, if you want to trade with crossover strategy, so in this strategy your stop loss and profit target would be same, and for buy trade look at this point as bullish crossover happened at this point, and price started its upward journey above to 9 and 20 period EMA. So you can accept strong uptrend, and take a buy position at same candle. Now let's see sell example. For sell setup, as we can see in this chart, price was trending below to 200 EMA, and EMA slopes downwards, which conforms the downtrend. Now look at this chart carefully. The price at these points trending below the 9 and 20 period EMA, and then price breaks the 9 and 20 EMA, and EMAs are also giving bullish crossover, which shows that price is in short-term uptrend, and as you all know this short-term uptrend is a pullback. And at this point price touches the 200 EMA, and this 200 EMA acts as a resistant. The price even crosses this resistant, but it reversed. Now if we connect this pullbacks and draw a trend line, then your chart looks like this. And as you can see at this point price is breaking the trade line, so we will consider it as a sell opportunity and take a sell trade at this candle. You can put a stop loss at 200 EMA, or a high of your entry candle, and your profit target would be 2 times or 1:1.5 risk-reward ratio. So as you can see here your profitable sell trade comes to an end. And more on, if you want to trade with crossover strategy and your profit target and stop loss would be the same. Then look at this chart as price was in short-term uptrend and was giving bullish crossover after took resistance at 200 EMA. And started its downward journey, and at this candle 9 and 20 period EMA, giving bearish crossover, so we take sell trade at same candle. Friends, all these strategies are too precious, but you are getting it free on my channel. So don't forget to hit like button and subscribe to our channel for more knowledgeable videos like this.